I actually think that gold stocks are not a bad bet for volatility this year. I mean, if you get the scare angle and more safe haven demand for gold, that should give us leverage to at least the better stocks. The GDX didn't do so well last year, but you all know if you look at the majors, the ones that delivered in spades and the ones that didn't, it's very clear that if you're a good stock picker, or at least go with the obvious better operators, you did quite well. You did better than gold betting on the better gold stocks last year. I think we'll see that again this year. So even if gold doesn't go to the moon, or even if it doesn't hit, the major Wall Street institutions are calling for 3,000 plus gold. That's pretty interesting. But I think the better stocks will deliver capital gains here.
Gold stocks could perform well this year, especially well-picked ones, even if gold doesn't skyrocket. The volatility will create demand for safe haven assets like gold, which should benefit the better gold stocks. Last year, it was clear that strong operators delivered better returns than the overall gold market. So, even if gold doesn't hit lofty price targets, good stock selection should still lead to solid gains. Lobo Tiggre, a well-known resource investor and analyst, highlighted that 2025 might see extreme volatility, particularly with Trump's potential policies, including tariffs and how he may approach the situation with Ukraine. You point out the contradiction in Trump's possible actions, like imposing tariffs on raw materials while also trying to cut inflation. This could be counterproductive. There's also speculation about Trump's approach to ending the Ukraine war by cutting off support to Ukraine, which could potentially escalate tensions and lead to further chaos. If things don't go as Trump hopes, it could risk worsening the situation, and the volatility could have broader implications, including a potential shift in international relations with China and Taiwan. Lobo exposes that the key takeaway is high geopolitical risks and uncertainty. You're suggesting that while a lot of guesswork is involved, the likely outcome is more volatility, both in the market and on the global stage. The consequences of Trump's decisions could extend far beyond what is visible in the markets, leading to potential shifts in international alliances and power structures, particularly with countries like Russia and China. Your advice? Be prepared for extreme uncertainty and don't underestimate the potential impact of these developments. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
The Trump trade of 2025 is high volatility, extreme volatility. I mean, there's a lot we can guess about what will happen, what won't happen. What will these measures tomorrow be? I mean, frankly, since Trump wants to cut inflation, it would be almost like clinically insane to slap tariffs on Canadian energy, raw materials, copper, critical minerals. That would just be so counterproductive. How could you possibly do these two opposite things? We have a president-elect who's known for chaos, so maybe possible isn't the right word there. But you see where I'm going with this. We don't know. I think there's a pretty good chance that he's not entirely stupid and the people around him aren't entirely stupid, and he's talking tariffs on everything, but if your goal is to protect U.S. jobs, you're not going to slap tariffs on the raw materials that feed into those jobs. Maybe Canadian cars or finished products or those from China, but not raw materials. So we'll have to see. We don't know what's going to happen tomorrow. Nobody's seen the written text of this executive order that will do these tariffs. There are a lot of guesses about what those be. There's no knowledge. What we do know, though, is that it'll be exciting. There will be volatility. There will be fireworks. This is the one sure thing about what's coming ahead. And not to get too scary here, but I just got to put this out there because I think it's for real. I don't know exactly, I've never met Trump. I don't know what he's thinking, but from what he said, this "I can end the war in 24 hours" claim, it seems that his idea is we cut Ukraine off. We tell Zelensky, sorry, bud, you're on your own. No more money, no more guns, no more bombs. You better go make a deal with Putin, right? That would be a way that I could see in his head. Trump would say, this would end it in a day. We could just finish this and stop all the suffering and wasting money, okay? But if that's the deal, if that's the art of the deal, what on earth is the incentive to Putin to agree to that? If Putin's enemy is being cut off at the knees, I can see him saying, I'm sending in more tanks, I'm winning. My enemy just got cut off. Why would I negotiate for peace? Well, maybe because the U.S. will threaten and will produce more oil and will cut off your revenue. Well, Trump's going to do that anyway, drill baby drill. I mean, how's he going to tell Putin, no, just kidding. We'll leave oil prices high. Now, I'm just a rock kicker, right? I'm Doug Casey's due diligence guy for almost 15 years, and now I do it myself. I'm not a political analyst. I'm not a military analyst. But I got to look at the world because the mainstream media isn't going to tell me what's going on, and I got to think about it myself. And all I'm saying here is there's a risk here. Like, if Trump goes into this thing in Ukraine and it doesn't go the way he hopes, there is a non-zero chance of this getting much, much worse. And by the way, if he succeeds and Russia wins, takes a larger chunk of Ukraine, what does that tell China? Hey, guess what? We're not defending our friends. Go ahead and take Taiwan. I'm not making a prediction. I'm not promising anything. I'm just saying, the volatility that we're talking about here isn't just in, you're not going to see it in the VIX. The volatility here the potential here is extreme. So what do we do in a case like this? Well, it may seem obvious. You don't need to hear me say this. It's not rocket science. By the way, I think rocket science is easier than cutting the United States government spending. Like, people have launched rockets. People just caught rockets. I just saw Elon Musk catch a rocket in Texas. I was there a couple days ago. But I have never seen anybody cut the United States government spending, after World War II.
Lobo advocates for gold not as speculation on price increases, but as a form of savings and insurance. Real wealth that can be held in hand for times of extreme need. You emphasize that buying gold isn't about betting on skyrocketing prices, but protecting against economic instability, similar to how you've used precious metals in challenging situations. Alongside physical gold, you believe gold stocks can offer opportunities, especially in a volatile environment where better-managed companies can outperform the broader market, even if gold prices don't hit extreme highs. In light of ongoing global inflation and fiscal dominance, driven by continued government spending and deficit levels, you argue that tangible assets like gold and commodities should be a focus for resource investors. The risk of more inflation, combined with the uncertainty in the market, makes it a good time to consider gold stocks. However, rather than making specific stock picks, you suggest selling puts to manage the uncertainty and volatility, helping investors navigate the unpredictable economic landscape. Now let's get back to the interview.
And I'm willing to say that with gold near nominal all-time highs, because I don't see buying gold as a speculation on higher prices. I call it the gold-dollar exchange ratio, or even as an investment. It's because it's savings, it's insurance. It is real wealth that you can hold in your hand and use in case of extreme need. And I have done this myself in my life. Okay, it was mostly silver. But I've had a case of extreme need where I had no other choice, and boy was I glad I had bullion that I could turn to when I needed it. So hear what I'm saying. I'm not saying, hey, go out and buy $2,800 gold, it's going to the moon tomorrow. That's not what I'm saying. It's more like Rick Rule. I own gold because I'm afraid it may go to $10,000. As far as making money, I've got one more thing to contribute here. And I said the only certainty is extreme volatility. I think the next closest thing to certainty is the continuation of what Lynn Alden calls fiscal dominance, or Michael Howell's global liquidity theme. And this is global, not just US. You Canadians know a little bit about this too. And that means more inflation. And it's really interesting to me that we've got this substantial uptick in inflation in the United States. Even the headline CPI, whatever the massaging and the numbers that they bandy about back there, the target of the Fed is CPI. They like the other measures better, but the goal is CPI, and it's been going up since September now, last September. This is huge. And they'll say, oh, it's just a bump on the road down to 2%. Well, guess what? It's not just happening in the United States. Well, A, it's not just a bump on the road. When you go up months, that's a trend. And B, it's happening around the world, global liquidity. This is a real problem, and it's not going away. And the Trump agenda, if you're going to cut taxes on tips and overtime and firefighters and everybody, and you're not, you have a plan, a hope to recommend spending cuts, but you have no power to actually do that, you're looking at a continuation of wartime levels of deficit spending. That's fiscal dominance. And I think that drives inflation higher, and that has implications for all of us as resource investors. I mentioned gold. as savings, at physical gold. But I actually think that gold stocks are not a bad bet for volatility this year. I mean, if you get the scare angle and more safe haven demand for gold, that should give us leverage to at least the better stocks. The GDX didn't do so well last year, but you all know if you look at the majors, the ones that delivered in spades and the ones that didn't, it's very clear that if you're a good stock picker, or at least go with the obvious better operators, you did quite well. You did better than gold betting on the better gold stocks last year. I think we'll see that again this year. So even if gold doesn't go to the moon, or even if it doesn't hit, the major Wall Street institutions are calling for 3,000 plus gold. That's pretty interesting. But I think the better stocks will deliver capital gains here. I think all real assets, including all commodities, not just monetary metals, are actually a good thing to look at in times of extreme volatility and fiscal dominance. And the one sort of more practical takeaway, I don't give away free stock picks. How many people are clients, right? So you all know I'm not going to give away the stock picks that you paid me for. I never do that, and sometimes I get booed off the stage, but sorry. But I will give you a strategy that I've been talking about with the independent speculator clients, and that is, we don't know what's going to happen. Extreme volatility. Things might go down, they might go up, we don't know. But one way to play that uncertainty is to sell puts.
Gold and well-chosen gold stocks can provide solid opportunities in a year marked by volatility and economic uncertainty. The ongoing inflationary pressures and fiscal dominance suggest that tangible assets, especially precious metals and commodities, will continue to be key for protecting wealth. Investors can better navigate the turbulence ahead by focusing on quality gold stocks and using strategies like selling puts. How do you see global geopolitical risks influencing the performance of gold stocks this year? What other commodities besides gold do you think are worth watching in 2025? We'd love to hear your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for joining us on this journey.